Ladies and gentlemen, good day and welcome to the Varroc Engineering Limited Q4 FY23 conference call hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Kokane from Ambit Capital. Thank you, and over to you, sir.
Yeah, thank you, operator. Good evening, everyone. I welcome you all to the Varroc Engineering 4Q FY23 results conference call. From the management team, we have with us Mr. Tarang Jain, Chairman and Managing Director, Mr. Arjun Jain, Full-Time Director, Mr. Mahendra Kumar, Group CFO, and Mr. Bikash Dugar, Head Investor Relations. I'll now hand over the call to Mr. Bikash. Thanks, and over to you, sir.
Yeah, thank you, Karan and Ambit team for hosting the call, and welcome all the investors and analysts in this call. Just before we start, just a small disclaimer that today's discussion may include statements which may constitute forward-looking statement. All statements that address expectation or projection about the future, including but not limited to statements about the strategy for growth, business development, market position, and financial results are forward-looking statements. Forward-looking statements are based on certain assumptions and expectation of the future event and involves known and unknown risks, uncertainties, and other factors. The company cannot guarantee that this assumption and expectation are exhaustive and will be realized. The actual performance or achievement could thus differ materially from those projected in such forward-looking statements. No obligation is assumed by the company to update the forward-looking statement contained today in our discussion. So with this, I would like to hand over the call to our chairman. Over to you, sir.
Thank you, Bikash, and thank you, Team Ambit, for hosting the call, and a very good evening to everyone. At the outset, I would like to highlight some positive developments of FY23. Firstly, the revenue from continued operations grew by 17.5%. The EBITDA margin improved to 8.7% versus 6.6% in FY22. Reduced net debt by 220 million since the divestment on October 6, 2022. 15 patents, including 5 patents overseas, were filed by the group. Commercialization of new products developed by R&D. Divested the loss-making European and American four-wheeler lighting businesses. Integrated the remaining overseas operations under one Varroc. And have built a strong order book in the new businesses. Now, talking specifically about this quarter, that is Q4 FY23, the automobile production in India during Q4 FY23 grew on a year-on-year basis for most of the segments due to the easing of the semiconductor issues and improved economic activity. However, the segment from which we generate around 70% of the revenues, that is two-wheeler, saw a degrowth as exports are impacted by geopolitical issues and domestic demand was impacted due to lower consumption in rural areas. On a year-on-year basis, two-wheeler production degrew by 3%, whereas three-wheelers grew by 7%, passenger vehicles by 13%, and commercial vehicles by 6.4% on a year-on-year basis. On a quarter-on-quarter basis, also, two-wheelers degrew by 5.1%, whereas passenger vehicles grew by 11.9%, and commercial vehicles by 22.6% due to pre-buying before OBD2 norms came into effect, and Q4 is seasonally a stronger quarter for four-wheelers. In terms of operations in Q4 FY23, revenue from operations grew by 2.6% on a year-on-year basis to rupees 17,011 million. Our EBITDA margin was at 9.5%, and it improved on a year-on-year basis by 340 basis points due to a business mix, recoveries, and operating leverage. Sequentially, also, the EBITDA margin has gone up by 170 basis points due to a business mix and recoveries. The reported PBT for the quarter was rupees 411 million. We could reach agreement with our customers on various claims which have been pending for some time, and the benefit was recognized in the Q4 results. On anticipation of moderate inflation as well as early sign of rural consumption increasing, we will continue to build the momentum in FY24, factoring in seasonality. In India, we continue to have strong order wins for new business in FY23 across business units. During FY23, lifetime revenue from new order wins is rupees 51,782 million. Out of this, business wins from 7 prominent EV customers is rupees 17,968 million. The order books also reflect our effort to diversify, as we see nearly 56% of lifetime order wins from the four-wheeler business and 44% from two and three-wheelers. As stated earlier, our effort to strengthen our R&D capability is showing results, as not only we have filed around 15 patents. We have filed 15 patents in FY23 from the group, but also commercialized products developed by R&D in this financial year. During the current financial year, our businesses will continue to focus on profitability, improvement, free cash flow generation, and debt reduction. We also got an A+ with stable outlook rating from India Ratings. Finally, I would like to keep you all updated on the final adjustments to be made to the escrow amount and the sale consideration for the deal with Plastic Omnium. The information was already given by us on 17 May 2023 to the stock exchange. The buyer submitted the final adjustment but failed to provide the necessary supporting details to enable the company to understand these adjustments. Hence, Varroc disagrees with the buyer on the proposed adjustments. Both the parties have now mutually agreed to attend the resolution of their disagreements in accordance with the provisions of the SPA. A qualification was added to this effect, as it is not possible to ascertain the exact outcome of the negotiations at this stage. We will keep you informed once the negotiations reach conclusion on this matter. Now I'll ask MK, our Group CFO, who will walk you through the presentation, which is already uploaded on our website and submitted to the stock exchanges also. Over to you.
Thank you, Saran. Good evening, everybody. So since our chairman explained the highlights and the industry performance, I'll straight away go to slide number 3 in the presentation, which is about the consolidated financials. So as our chairman highlighted, in Q4 of this year, we actually reported a PBT of about 41 crores and a PAT of about 40 crores. EBITDA was 9.5%. But the important thing here to note here is on full year basis, we actually reached about 8.7% of EBITDA or close to 600 crores of EBITDA in absolute terms on full year basis. The reported PBT was about 83 crores. Now, one point I would like to highlight here is this is after suffering a one-time exchange loss in the first half of over 56 crores. So after that, the reported PBT came at about 83 crores and PAT at about 39 crores. So that's about the consolidated numbers. In the next slide, of course, we gave the revenue breakdown. No significant change from compared to last quarter. So we continue to be predominantly a two-wheeler and three-wheeler player. It's close to 72% coming from that segment and about 25% coming from four-wheelers. In terms of business unit mix, our PBU continues to be the largest one. It's close to 1/3 of the revenue coming from there. EBU gives about 22%, lighting about 21%, and MBU about 12%. Aftermarket is close to 9%. In terms of customer mix, Bajaj, of course, is our largest customer with close to 37.5% revenue coming from Bajaj, and the remaining coming from various other customers. In terms of geographical distribution, about 82% comes from India and the rest comes from outside India. So now going to the next slide, which is about the net debt movement. Would like to highlight that the equity now touched again back to 1,000 crores plus. You may recollect that because of impairment, we had to take some kind of beating earlier. So we're back to 1,000 crores of equity. Of course, EBITDA annualized is close to 600 crores, like what I mentioned. The net debt level ended up at around 1,278 crores. Here again, all of you may recollect that when we actually did the divestment on October 6th, the net debt was close to about 1,300 crores. So we brought it to 1,278 now. In terms of net debt to equity, it actually means we are close to about 1.27. Net debt to EBITDA is slightly above 2 at 2.13. So that's on the debt-related numbers. Coming to the order wins, of course, our chairman explained that close to 5,200 crores of order win, or 5,178 crores of order win was there in FY3. And then most of it came from the four-wheeler. 56% came from four-wheelers, and about 44% only came from two-wheelers. And similarly, nearly close to 1/3 of it is in electric vehicles. In terms of Bajaj versus non-Bajaj also, I think we can see that 86% of these lifetime revenue is going to come from non-Bajaj customers. So again, going to the next slide, which is what we have been highlighting earlier also, that these focus areas continue to be very important for us. We are focusing on revenue growth. On top of that, contribution margin improvement is the next focus area. So these two, with the stringent control on fixed cost, should actually result in PBT growth. And then on top of this, with very robust working capital management, and of course, strong control on capex also, this should all convert into a free cash flow generation, healthy free cash flow generation, which will be prudently deployed. Our initial focus will be debt reduction. So that's how we are going to follow in the near future. So with that, I will stop here. I think the next slide is about awards and CSR initiatives, which we can see from the presentation. And the backup details about our company or the overall corporate presentation is also attached in the subsequent slides. So let me stop here. We'll be happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nikhil Rungta from Nippon India Mutual Fund. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So 2 to 3 questions from my side. First is if you can give slightly more details on this auditor's opinion and the details which you have provided on stock exchange on 17th. Like what exactly are the disagreement, and because of that, will the consideration come down further or increase, or what exactly is it?
Yeah, so let me answer this question. See, as we mentioned in the stock exchange announcement, it's too early to comment on the amount or the direction of these adjustments. See, as per the agreement, we left about 28 million of escrow with the buyer. And it is also subject to some final adjustments, which should be done 90 days after the closure date. So those details or those adjustments have been submitted by the buyer, but we find some of them to be not backed up by enough details. So that's the reason we actually refuted those, and then we actually asked for more details. Those details are yet to come to us. So now we are going to have a discussion in person, maybe sometime in June, first week or second week. So after that only we'll get some clarity about what's going to be the future state. So that's the position as of now.
So basically this issue is only for the escrow amount. There is no issue on the deal. The deal has been completed, right?
Yeah, of course, deal is completed, but the escrow amount, so indirectly when the escrow is adjusted, the consideration also may get adjusted. I think that's the meaning. So yeah, so the deal is not under question. It is the amount which is what we need to finalize.
Okay, got it. So the amount can be higher or lower, which might lead to further one-time loss or profit in our numbers, right?
Yeah, we never know, and we need to conclude this discussion, then only we will get to know. But yeah,
correct.
Directionally, yes.
Got it. So, second question is, what type of capacity utilization are we currently working at, and till what level can we reach? In terms of revenue, we are already at 6,900 crores, wherein our margin is 8.7. So, till what level can we go in current capacity, and what could be the margin there?
Yeah, so our capacity utilization presently for whatever we invested, a lot of the investments were actually done also, in FY19. So we are today, I would say, on an average, not more than 60 or 62% of the total. So there's a huge upside, which is possible, and as we are largely dependent in the two-wheeler sector, about 70%, and that has unfortunately not performed very well, including our main customer. That's the reason why we are at about 60-62% of our capacity utilization. So there's a huge scope, So we are actually, so our main focus, to hit the nail on the head, our main focus is capacity utilization. We can go to 80 to 85% at least of this utilization. So you can seeing the revenue we are at today, that you can get a sense of what kind of revenues we can really drive out of our existing investments we already have. But in any case, I think in the coming year, we are looking at a robust double-digit growth overall from whatever the revenues, we have achieved in FY23.
And what type of margins are we looking at that time?
So see, like we have said, we are striving for overall double digit, and that's something we will also strive for in the coming year. And that's something we feel, is possible. So therefore, that's going to be our objective.
Got it. Sir, last question from my side. Where do you see debt levels, say, by end of F24, and what could be the capex for FY24?
Yeah, so hi Nikhil, Mahendra here again. As far as capex is concerned, I think it will be close to maybe about 200 crores at the total level, including overseas and also India. Coming to the debt levels, like what I mentioned last time, it's maybe still too early to comment. We expect most of the reduction to happen only in H2. But yeah, that's our main focus area. We won't be able to give a number or place a number now. But as you have already seen, we reduced by about 22 crores, so we'll continue to put in those efforts. We will see the results in H2.
Got it. That's all from my side. Thank you so much, and all the best for the future.
Thank you.
Thank you. We have the next question from the line of Vinay Jain from Karma Capital Advisors Private Limited. Please go ahead.
Hello. Yeah, thank you for the opportunity. Just had a couple of questions. So firstly, in the opening remarks, we mentioned that there was some benefit of pending claim settlement with various customers during the current quarter. So can we quantify the amount?
Yeah, Vinay, this is Mahendra here. See, basically, like how we explained last time, this is an annual exercise which keeps happening in this particular industry. And when it happens across several products and across multiple customers and on a cumulative basis. So it is very difficult to slice it for each quarter separately. So that's the reason I think the best thing would be to see it as an annual number. Or if you want to look at the margins instead of looking at quarterly numbers, it's better to see the annual number. So I think that will give a better indication.
So this would be part of the overall revenues, right? It would be in that line item.
Correct.
Understood. And the second question was regarding our China JV. So we had plans of consolidating that JV into our numbers. So any progress we have made on that front?
Yeah, see, as of now, we have taken the numbers based on what they declared in the arbitration proceeding. So based on that, we actually took it, but we don't have the audited numbers yet. So that's the reason we did not formally consolidate. Once the arbitration proceedings come to an end or we reach some kind of settlement with them, that's when we'll be able to formally consolidate based on audited numbers. But we'll continue to get the information based on these arbitration rulings. So that's how we will do it in the near future.
Understood. And lastly, again, so if you see on a full year basis, we would be at a gross margin of around 35.5%. So hopefully, we should be improving on this number, as you also rightly mentioned in the opening remarks that focus is on improving the contribution margin. So this number should improve in the coming quarters and years, right?
Yeah, I mean, we have various cost reduction efforts which our teams are working on. But yeah, directionally, yes, it should improve. But we also need to see what kind of inflationary pressures coming in future and how much we'll be able to pass it on. But yeah, directionally, what you said is right.
Understood. Yeah. Thank you for taking my questions. All the best.
Thank you.
Thank you. The next question is from the line of Vishal from Swan Investments. Please go ahead.
Thank you for taking my question, sir. Sir, one question regarding you said that utilization levels are around 60 to 62% currently. But I am seeing in the cash flow statement there is a capex purchase of plant and machinery of approximately around 530 crores. So can you throw some light on this number?
Yeah, Vishal. So my suggestion would be that you should not go by the cash flow statement because this includes discontinued operations also. So it has the impact of discontinued operations number also for the first 6 months. So if you want to get a sense of how much capex we really incurred in the continuing operations, I think it could be close to 300 crores last year.
Okay, great, sir. And sir, regarding there is one more item, cost incurred on intangible, which was 200 crores last year, and this year also it is 68 crores.
You're referring to the cash flow again?
Yes.
Yeah. So like what I said, don't go by the cash flow numbers. That again includes the discontinued numbers also.
Okay. Thanks, sir. That was all from my side. Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Jyoti Singh from Arihant Capital Markets. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, my question is on the same debt side. What's our view going forward? And second is on the growth outlook side. So this time we did it around 17% for FY23 level. So what's our view going forward?
Yeah, so like what our chairman explained, so definitely growth is a focus area for us. So we will continue to aim for strong growth going forward. Of course, it also depends upon, part of it depends upon the industry growth and part of it on content growth. But that is certainly a focus area, but we won't be able to give a number if that's what you are expecting.
Okay. And sir, like earlier we had discussed, we will going to diversify from two-wheeler to other segment also. So how these things is going on that front, and what are the strategies that we are following for that?
There's no specific strategy to diversify, like how we explained based on the order win. If you really look at the new orders, I think most of them are coming in the four-wheeler segment only. So I think it naturally happens because we are now giving a lot of importance to the four-wheeler segment also, both in terms of lighting products and other products. So that will eventually happen over a period of time, but immediately you won't see a big swing in the two-wheeler versus four-wheeler percentage because of this.
So sir, just kind of assumption, if you can give us, till what time we will see our company in a better level to, reducing the debt and making a company better and profitable?
Yeah, see, profitable, of course, I think we have already done. Of course, we need to now continue this. Now, as far as debt reduction is concerned, like how I mentioned in my previous calls also, we have to be a little bit patient. We are hoping that H2 is when I think we can see some kind of good reduction, because the existing operations don't need any more debt or any kind of debt support. So it's only generation which comes from operations which we have to use to repay this debt. Of course, we need to see the other areas. For instance, let's say if the China settlement comes to some kind of a shape, we may have to invest some amount there. So those kind of non-operating areas may have some kind of impact on debt levels. But for operations, the focus continues to be debt reduction.
So, sir, is there any...
We request you to please rejoin the queue for further questions. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Aditya Jawar from Investec. Please go ahead.
Yeah, thanks for the opportunity. My first question is, just to better understand the new order wins of this, 5,200 crores, if you can split us between the completely new order wins and re-wins, it would be quite helpful.
Aditya, these are completely new wins only. We don't report a replacement order.
So this is completely new order wins, Vikas?
Yes.
Okay. Fair enough. My second question is on the China JV. So, where are we? I mean, what is the status with regard to separation with the JV partner? If you can throw some light on the revenue growth, margin expansion that we have seen. So this quarter, clearly, the performance of China JV was quite encouraging. Was there any one-off in this quarter? If you can throw some light on that.
Sorry, you're talking about the China JV results?
Yeah.
China JV, see, the arbitration proceedings are in progress. So I think they may go on for maybe another 1 year or so, 1 to 2 years. But then having said that, there is also, the arbiter is also encouraging the respective parties to sit and discuss and then come to some kind of a settlement. So those things may happen in the coming quarters. So that's on the status. Sorry, what was your second question?
Business in China.
Yeah.
I think that's doing pretty well. I think last year, as you all know, it had a COVID impact for 2 to 3 months. But now I think the business is back in full action.
So Aditya, in China, being the largest anyway car market and the penetration of EVs being the highest in the world, I would say as a JV, both the factories have been performing fairly well. And we do see a good level of growth also in the coming year. So definitely we do expect, the performance from the JV to do well. So what you see actually in this quarter is something, which will continue. So we're hoping for actually good results also in FY24 from our China JV. But of course, our effort is that, like we said earlier, that the arbitration proceedings are on. Probably it could continue for, probably up to maybe 9 months or so. So our objective is that maybe reach an out-of-court settlement, with our partner sooner than later. That's also something which has come out of the arbitration proceedings that we try to, kind of, settle amongst ourselves sooner than later. So that's what the effort is now, that we try to, culminate, or rather split, at an earlier date so that we can then focus ourselves, for future growth in China, which we expect to be a good market for Varroc.
Okay, that's quite helpful, Taran. No, but clearly there is no one-off in this quarter, right? Because it's almost about 20% of our PAT, the China JV number.
No, it is not a one-off. This is something which will continue.
Okay, that's very good to hear. The next question is, if you can highlight any breakthrough into, OEM for our EV component in this quarter.
So, maybe Arjun, if you want to take this.
So, I think like we said before, right, we continue to be engaged with 4, actually 5 now, different OEMs, locally and abroad with respect to the EV portfolio. When there is something to report, for sure, we will report it.
So we are very hopeful, Aditya. I think we're very strongly engaged. We have, very strong, highly efficient products which we have developed. And we are engaged with, some of the prominent, two-wheeler OEMs in this regard, and we are hoping for some results, in this financial year.
Okay, perfect. My final question is to Mahendra. So if you can highlight what should be the tax rate assumption in FY24?
Finally, tax rate assumption.
Yeah.
FY24, see, basically, if you really look at the applicable tax rates, VEL is at 35%, plus of course surcharge and all. And VPL, which is a subsidiary, is at 25% plus surcharge.
So on a blended basis, how much should we consider, sir?
See, if you are looking at the exact impact on P&L, it is difficult to predict because it also depends upon the movement in deferred tax. So it's difficult to actually put a number to it in terms of what could be the effective tax rate. But if you really look at the normal applicable tax rate, I mean, you can broadly make it out. And VPL is roughly about 1/3 of our business. So then you can compute based on that.
Okay, perfect. I'll fall back in queue. Thank you and all the best.
Thank you.
Thank you. We have the next question from the line of Ashin from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity. So my first question is on the other income number. So that seems to be high this quarter. So is there any one-off, and what sort of other income we should, take going forward?
Yeah, see, Mahendra here. So there are basically two major components in it. One is the government incentive, which we get from the state governments for our operations. So that we recognize over the period of the benefit based on the volumes of the respective business. So that's one reason. Second reason, of course, every year end we also do some cleanup in provisions and liabilities. If there's anything which is outstanding for too long a period, we generally reverse it. But these are the main things.
Okay, thanks, sir. And then my next question is on the lighting business. So this quarter, the lighting business, there was a sequential drop in the lighting business this quarter. So could you give us a sense on how the global two-wheeler lighting business is doing, and how is the Indian lighting business doing, and what sort of growth do we see in both of them going forward?
I think our lighting business, when it comes to India, we are both in the two-wheeler lighting and the four-wheeler lighting business. And we have seen actually a good growth, I would say, when it comes to our both lighting business in India. Both two-wheeler, four-wheeler, we have won, on the two-wheeler side, we continue to win, various lighting programs, India and abroad, from various customers. On the four-wheeler also, even recently, we have won, some very prominent business even for the EV vehicles, on the four-wheeler lighting side. When it comes to abroad, our lighting business is mainly two-wheeler lighting, as we have exited from the four-wheeler lighting business. So there we have our plants in Italy and Vietnam, and also in Romania. There we are seeing actually a good performance, and also, yes, the growth has been a little bit subdued, in the last 1 or 2 quarters abroad. But that's something now we see we will see, in this coming year moving forward. So overall, I would say India as well as our businesses abroad in Europe and Vietnam, we expect to see actually a good level of traction, in our overall lighting business, because we do possess a very robust and a good level of technology, in both these sectors.
Yeah. And sir, my third question is on the order book side. So this quarter we have seen very good addition of orders on the four-wheeler side, and if we compare the whole year as well, the four-wheeler orders have been very strong. So what sort of a ramp up do we see on the four-wheeler side, and where are these orders coming from? Which segment?
So our passenger car offerings are across lighting and polymer, and I think the big reason why we've been able to win incremental businesses is because we've been early to launch, fair amount of technology over the last 18 months. General development time for a passenger car vehicle would generally be between 24 to 30 months. Now maybe 20 to 30 months. So it's hard to put a specific month or a quarter on it, but that is the timeline in which we would expect the ramp-ups for these programs to start taking place.
Okay. Thanks. And my last question is EV revenue, which you have reported of 100 crores. So could you give us a split on what would be our conventional product and what would be our new product, and what sort of a growth do we see in this number going ahead?
It's 80-20, let's say 80% is our new product and 20% is our conventional product.
Yeah. Thanks a lot. I'll join back the queue.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, good afternoon, and thanks for the opportunity. Our chairman made a remark that this year we expect to grow around double digits. So when our 70% of business is coming from two-wheeler, which is expected to do a single digit, as well as around 20% of business is from global. So if you can give little more color to what will drive our growth in double digits?
Well, I think it's the same trends that have driven our growth in this year also, right? Because in general, the product portfolio and the strategy that we pursued over the last few years has been to drive content growth. And the primary content growth that is taking place in a two-wheeler and also, I would say, in a passenger car is with respect to electronics. And this is where, whether on an IC engine, whether on an EV, we enjoy an extremely strong position. The further topic also is, even when we look at the segments, we still see the premium segment in two-wheelers doing well, which is again where we have a significant amount of content. So, in our expectation, even as we look at the years going forward, the new technologies, the new programs will continue to grow in size.
Is it fair understanding that this is more profitable than our traditional business, so which can help us, apart from operating leverage, to achieve a double-digit kind of a EBITDA margin?
So I would not comment maybe on profitability of specific products and programs, but in general, right, as you said, greater the operating leverage, the better the position it puts us in.
Okay. Thank you and all the best.
Thank you. We have the next question from the line of Prateek from Nippon Asset Management. Please go ahead.
Yeah, hi. Just is it fair to say that QOQ, when I look at your performance, it's very similar to how the automotive markets have behaved? This is primarily because of our largest customer, X, that there would have been growth QOQ. So what I'm trying to get to is basically I can't see the benefit of content flowing through despite having a very poor, despite, the automotive markets not doing well. Is it only because of Bajaj?
No, I would say that the content growth actually has, in a way, helped us reach a certain level of revenue. Otherwise,
Correct.
The Bajaj volumes were, quite low. They were quite negative, actually, for the whole year, including in Q4. But it was the content growth, what earlier was mentioned, that, because of electronics, is the reason why we've been able to reach a certain level of revenue and, on a very low capacity utilization. So therefore, I think that this content growth is really helping us in driving us at least a certain minimum level of performance in the market.
Got it. The second question is more on your directional or strategic initiatives of increasing contribution margins, reducing fixed costs. Could you just talk a bit about how much of that or has any of the strategic initiatives played this quarter? Because the gross margins have improved. I understand there are some one-offs over there. But even if you see sequentially, EBITDA margins have expanded, right? So I'm just trying to get to whether it is mostly attributable to the one-offs or there has been some improvement in terms of controlling fixed costs / improving contribution margins.
Yeah, see, the efforts related to our cost reductions, including the fixed cost control, I think are just beginning. They have just started, so we'll see most of the benefit maybe in the current year. So, but I won't be able to put a number to, but yes, definitely we should see some improvement this year.
Got it. And Mahindra, just by your guidance of, repaying debt in H2, it looks like most of these benefits will start showing in H2, right? The improvement in margins, which will help you reduce debt.
Correct. So on top of that, I mean, we are not just relying on profitability improvement alone for debt reduction. In fact, there is enough to be done in working capital side also, so that continues to be our effort. And second thing is, if you really see our capex versus depreciation, so we don't need to really invest 330 or 340 crores, which is our depreciation number. So to that extent, there will be that will reflect in the FCF generation also, which should help us in debt reduction.
Last question: what's your effective cost of interest cost, and where can you get this down to with improvement in cash flows?
If I really look at the recent deals which we are getting, I think they are anywhere between like 8.5 to 9.25. That's the range. So obviously we are trying to keep it at the minimum as far as possible. I think we are getting some good positive reaction, and maybe this kind of improved profitability will strengthen our case further.
Would it be possible for you to call out fixed cost initiatives or fixed cost reduction initiatives / improvement in contribution margins in terms of teams, culture, KPIs, points? Is it possible?
No, we don't want to give any guidance like that. And again, let's wait for a couple of quarters to see them materialize and then talk about it.
Sure, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Pradyumna Chaudhary from JM Financial. Please go ahead.
Yeah, hi. So my first question is, when you speak about new order wins, when you give a number, how does the calculation take place? Like, what kind of growth do we assume for the product or the model that we are supplying? Just wanted to get some clarity on that.
Generally, any order win is reported based on what is the customer expectation of the volume that they will achieve on that particular model. Of course, we will temper it with again, there is no, let's say, precise science to it, but we will temper it with what is the reality that we see in the market today also. Right? So it will generally be a blend of that. I think that's the best answer I can give you.
Understood. And secondly, regarding your EV products like traction motors and DC-DC converters and all these, so we see quite a few companies talking about manufacturing these. So how are we really differentiating ourselves, especially when it comes to pitching ourselves to customers outside our anchor customer?
Yes, I'd say there's two major points of differentiation. I think the first one, and I think I cannot state it enough in terms of how much of an advantage it is when we actually engage with customers, is that we are already completely localized when it comes to manufacturing. So, and we have enough product in the field. We have been manufacturing now for more than 12 months. So that is definitely a significant advantage for us. And the second major advantage at the product level is around efficiency. Right? I think the most expensive component in an EV is the battery. Right? And all of our products are geared towards ensuring we're able to maximize range based on any particular battery life, based on any particular battery size.
And thirdly, the R&D setup which we have, which helps us to develop and commercialize the product very quickly.
Yeah. So, of course, I should mention that also. I think, when I say localization, one is, of course, the manufacturing localization, but also, let's say, the engineering and development capability localization is comprehensive. Now, I think we have said it before also, but, EV products today, are not necessarily mature technologies. But I think the validation and testing setups that we have allow us to move through generations of maturity very, very quickly. And, again, when I say we're engaged with multiple customers, I think that's definitely something that they really like.
Understood. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, we request you to please press star and 1 at this time. The next question is from the line of Arjun Khanna from Kotak Mutual Fund. Please go ahead.
Thank you for taking my question. My first question is just a follow-up to a question by an earlier participant. You talked of cash release from working capital. When I look at your balance sheet, our inventory plus receivable is equal to payable. So in a sense, you're running an extremely tight ship, probably a best-in-class compared to even most of our peers. So just curious, how do you intend to release cash from even this position?
Yeah, so there are 2-3 things we are trying to do. One is, of course, inventory. There is still enough scope for further reduction. Actually, we started this about 6 months back. I think we achieved some success last year already, but still there is more to be taken there. And second thing is, if you really look at our payment terms also, I think still there is some scope for improvement in that area again. Plus, there is something in various other categories, like we have other current assets where certain deposits are locked up. There are certain GST input credits which need to be fully utilized. So there is a big shopping list which we are working on. So it doesn't come from one single area, but across multiple areas is where we need to take it.
Sure. So my second question is in terms of capex. So while we have brought out roughly 200 crores of capex, how much would be spent in India and how much outside India? Do we have a breakup there?
Most of it is in India only. It is almost like 80 to 85% is in India only. The remaining 15% may be abroad.
Sure. So our Romanian unit would be fully built up in terms of SMT lines and new lines we were looking at scaling up on?
So, I think the way to think about scaling an SMT plant is there is definitely space to scale further. And for the business that we have across our different SMT plants, we have enough capacity. Of course, if there are significant order wins, etc., that would need, of course, further capex also.
Sure. So my final question is probably I haven't understood it as well. In terms of China, you mentioned in arbitration and we have used those numbers. So aren't we in control of the plants? Why would we have to use numbers from arbitration? Won't our people be on the ground?
Yeah, so it is like this. So what is under our control is one plant, but that is the step-down subsidiary. So for consolidation, we need at the holding company level. So we are 50% partner in a joint venture, and this particular plant, which is under our control, is a subsidiary of that particular JV. So unless we get a JV consolidated number, we won't be able to consolidate here.
Sure, perfect. Understood. And the second part to this is in terms of the auditor qualification, just to reiterate, it's only the escrow amount that's under consideration, or it is the even the EV value that could be under consideration or reconsideration?
Yes, see, as per the agreement, the EV consideration is also a subject matter of discussion. But having said that, we have significant amount of escrow there of 28 million. So which way it goes, we need to wait and see. We need to wait for the negotiations to conclude and then see which direction it progresses and what kind of impact it will have.
So theoretically, it could be lesser than 28 million or even more than 28 million. Is that the right understanding?
And politically speaking, we shouldn't be talking about that because it comes in the public domain and the other party also may be seeing.
Fair enough. Sure. Fair enough. Sure. Thank you.
Thank you.
That's it.
All right. Thank you. The next question is from the line of Abhishek from Dolat Capital. Please go ahead.
Thanks for the opportunity. Sir, what would be the key revenue for email business?
Sorry to interrupt, sir, but the line for you is not very clear. We request you to please use the handset while you're speaking.
Hello?
Yes, you're audible now, sir. Please go ahead.
Yeah, so what would be the key revenue drivers for the polymer business? If you can throw some more light on new business win and new products addition in this particular segment. And how do you see RM trend and margin outlook in this segment?
So, The key drivers for the business again, right? I think over the last 2 years, we have been able to, we have productionized multiple processes for the first time in India, right? So whether it is 2K molding with, dolphin flip, technology, even topics like, roof frames, etc., which are anodized. These are really first-time products. So that within these processes and the product lines that these processes build is where we expect to see the growth. Is where we will see the growth. And then there is also an ability to drive further value add also, for example, whether it is painting, whether it is integration of, certain other featurization and door panel, which customers are increasingly looking for, because there is clearly a increase in the standard of the cabin that OEMs are looking to achieve. So directionally, I would say this is where the growth for polymer is. This is where the growth for our polymer business is coming.
How do you see RM trend and margin output in this business? Because earlier the raw material prices was quite high, and that was impacting the margin. But now it is going down. So how do you see benefit of it?
So we don't comment specifically on product-specific margins.
Okay. And so in metallic business, which is a high margin business for you, there's a high risk from the EVs accelerations. So what is your plan to de-risk it? Have you added new products on this particular segment?
Yeah. So, again, I think when we talk about EV penetration versus the capacity that we have versus the overall split of the business, I think we feel we are quite comfortable where we are at right now. Even within the metallic business, it's not like the entire metallic business is at risk. And EV also will need, quite likely going forward, transmission assemblies. So there is enough, I think we're quite comfortable with the amount of capacity reusability that we have. We also already we also already supply certain metallic products, into EV as part of the, for example, for the motor, the shaft we make in-house. Right. So, from that perspective, we don't see a major threat to the capacity, at least over the next 2 to 3 years as a result of EV.
So, supplying this motor control to Bajaj Chetak. So you have also started to supply this to other e-two-wheeler brands?
No, as of now we are focused on Bajaj and Bajaj models.
Okay. And so my last question on this performance of the VLS remaining business. This comprises four-wheeler lighting, two-wheeler glow lighting, and electronics. You have mentioned around 18.3% revenue from the global business. Is it the VLS remaining business revenue?
Can you repeat the question? We could not hear you very clearly. Sorry. Can you please repeat it?
So you have mentioned 18.3% revenue from the global business.
Yes.
Is it the VLS remaining business revenue?
That is VLS remaining business and also the export which we do from India.
And how much classification in terms of the export from India and the VLS remaining business out of 18.3%?
Again, business-wise, we don't want to talk about that. This is what we have been reporting, and this is. But exposure overall is not significant, but yeah.
Okay. Yes, predominantly overseas business. Yeah, export is not so significant at this stage.
Okay.
But there is scope for improvement there.
Okay. Thank you. That's all from me.
Thank you. The next question is from the line of CA Kanwaljit Singh from Balaji Finvestment. Please go ahead.
Hello?
Mr. Kanwaljit Singh, your line has been unmuted. You may proceed with your question.
Hello, Anji. My question is, what are the new avenues that the company is looking forward in the next year, and what will be the capex next year?
So I think the CapEx question, CFO already answered. We would expect it to be around 200 crores. I don't think there is necessarily as many new avenues we need to pursue. I think we will continue to pursue the existing avenues that are driving growth for us, which would primarily be around passenger car and the businesses that we win in polymer and lighting as a result of the first mover advantage we have on certain technologies over there. And secondly, as a result of premiumization and content growth within two-wheelers, whether that be EV components or higher-end electronic components on premium two-wheelers.
Sir, the current participant in the queue seems to have dropped from the queue. We will proceed to the next question, which will be from the line of Vishal from Swan Investments. Please go ahead.
Hi, this is Sachin Kasra here. Congrats on finally showing some improvement in terms of EBITDA margins and getting closer to double digit. Hope to see this sustaining and improving going ahead. My question was, even if you see the segmental numbers, in the other segment, which I presume primarily refers now to the Italian operation, there is a good improvement quarter on quarter. So if you could tell us a bit more, whether again there is a one-off in this or is there some structural changes we have done in this business that's become profitable?
Yeah, so sorry, your question was not very clear, but I guess you're asking about the overall margin improvement, right?
No, sir. My question was, when we look at the segmental numbers, the other segment, which I think primarily refers to your Italian operation, there also we have seen a sequential improvement in profitability. So are there some one-offs in that, or is there we have done some structural changes, hence the profitability there has improved?
Yeah, there was no one-off, but I think over the last 1 year or so, Italian operation has been doing well. They are doing EBITDA positive and they are reporting profits also. So we are hoping that will continue.
And what is the long-term strategic fit in terms of the Italian operations? We continue to run them the way they are with focus or not? Just improving the profitability, or at some point of time we may look also in terms of the strategic fit of the Italian operation?
So, the Italy operation, you are talking, I think, about the lighting business, right? The two-wheel lighting business.
Only 14 parts.
Yeah, so see, presently, frankly, we're not thinking too much ahead. So we are just thinking that, how do we improve the operations? And we have, as you know, significantly improved the profitability, in this forging business of ours. We still have some certain capacities which are, underutilized. So our basic focus now is that how can we get in more revenue in this plant at the moment, and at the same time, drive also further operational, improvements which are possible. So the focus will be revenue growth as well as profitability improvement coming through, driving, further operational efficiencies. So this is our focus at the moment, We are not looking at something more at the moment.
Sure. Second question was on the contribution from electric vehicles. You have mentioned in the presentation that it was around 1.5% or approximately 100 crores. Considering the strong growth in the EV segment, can you give us some sense and the type of order list that we have, what type of growth we could see in your overall EV business in coming year, maybe over a 2-3 year period?
No, see, basically, I think it was, like you said, it was 100 crores. But we will see, and this was largely coming, I think, from one major customer presently. And talking about, largely we're just talking about the EV powertrain, because we've already said that if we were to talk about other products, whether it's polymer or lighting and everything, then obviously we have won a lot of business last year, more than 1,700 lifetime revenue orders from the EV space. But talking about the EV powertrain, we expect, a good level of growth, in this, on the EV powertrain space, even from the one customer we have today. And we're already seeing a growing momentum coming in, from this one customer on their model. And we are hoping that the growth will be quite significant in this financial year.
Sure. So my next question was on working capital. As mentioned by the CFO, that there are a lot of areas other than just inventory. So if you could give us some sense that, are we looking at some good number, or is it just giving some efficiency in the overall working capital, or the release from working capital could be reasonably significant, and hence there could be a perceptible improvement in the net debt because of the release of working capital?
No, it won't be a very significant number because part of it was taken in 23 already, but still there is some more left. So I won't be able to put a number to it. But there is enough scope for improvement. It may not be, if you're expecting it to be a 3-digit number, it may not be.
Sure. And sir, just last question to one of the previous queries wherein you had mentioned that, the ratio of two-wheeler and PV may not change significantly, but when we look at your order book this year, then when we see the share of, passenger vehicles and commercial vehicles is almost like 50%. So I'm a little confused as to if the order wins has been so strong from the non-two-wheeler segment, why the ratio in terms of revenue should not change little bit more in favor of PV and CV, or rather four-wheelers.
No, what I meant to say was it will change over a period of time. It won't change immediately. If the same trend continues for, let's say, a few years, then it will change significantly, but not immediately.
Oh, thank you.
Thank you. Ladies and gentlemen, that will be our last question for today. I now hand the conference over to the management for closing comments. Over to you, sir.
So thank you. Thank you, and thanks to everyone again for joining, listening, and asking your relevant questions. We as Varroc continue our journey towards generating strong financial performance and creating value for our stakeholders. Thank you.
Thank you. On behalf of Ambit Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.